Good morning and welcome to the Killik & Co market update. It's been a busy week with lots of company results coming out. Of the S&P 500 companies that have reported so far, over 80% have reported results that have beaten expectations in terms of earnings, and this has helped to push the index to a new record high. Here's the 12-month chart. The Federal Reserve announced another interest rate cut earlier in the week in the US, and lower interest rates are generally good news for equities. However, despite the strong performance of the overall market, a measure called market breadth has been declining. Market breadth measures the extent to which all companies in an index are participating in a rally. If market breadth is strong, then most company shares in the index are rising. If breadth is weak, then that means the strong performance of the index is being driven by a limited number of shares. This chart shows the percentage of stocks in the S&P 500 whose current share price is above the average of what their share price has been over the last 50 days. You can see that back in May, 80% of stocks were trading above their 50-day average. That figure is now less than 45%. So despite the fact that the S&P 500 index is at a record high, a lot of the stocks within it are not at record highs. This one shows the performance of different sectors within the index over the last year. The black dashed line shows the whole S&P 500 index, up just under 20% in the last year. The green shows the tech stocks within the index, up 35%, but the pink, purple and blue show healthcare, energy and consumer staples, all in negative territory on a 12-month basis. The same can be illustrated by this heat map. The dark green boxes show areas that have done well in the last year, and the red show areas of weakness. Unsurprisingly, there's a lot of dark green in the technology and communications boxes, and a lot of red in healthcare, staples and energy. This means that although the index may look high, there are still many areas that don't look expensive compared to where they have been trading previously. Several big tech companies have reported this week, including Microsoft, Meta, Apple, Amazon and Alphabet, and we've seen some big share price movements. As always, when they look at these results, investors are looking at revenue and profits, but this quarter there's also a particularly big focus on how much these companies are spending on AI. Meta suggested it might spend over $100 billion on AI next year, which was much more than the market had expected. The shares fell over 12% when the results came out, and this is not the first time that Meta has spooked investors with its spending plans. Back in 2022, the company announced plans to invest billions in the metaverse, and this was at a time when the market was falling anyway due to rising interest rates. On this 5-year chart, you can see that the stock lost over 75% of its value between late 2021 and 2022, although investors buying in at that low would have made 10 times their money. Alphabet shares, on the other hand, went up strongly when the company reported its first quarter of over $100 billion in revenue. Revenue accelerated in all the company's key divisions, Search, Cloud and YouTube, and there was also a good performance from Alphabet's AI product, Gemini. Please do give us a call if you'd like to hear more about this week's big tech results. And finally, it's not been a good week for the pound, which has fallen against both the euro and the dollar this week. Against the euro, the pound has hit its lowest level since 2023. Here's a 15-year chart. There was a big drop after the Brexit votes, and the current level is not far above that low. Generally, a country with a higher interest rate will experience a stronger currency. However, the pound has weakened against the euro, despite the Bank of England having a higher interest rate than the ECB. Here's a 10-year comparison. The ECB's rate is in the green, and the Bank of England's is in the pink. The implication here is that there is a degree of concern about the upcoming UK budget and the impact that this might have on the growth of the UK economy. It's only 4 weeks now until the day of the budget. Moving on to have a look at next week, it's looking very busy on the calendar, and we are expecting results out from McDonald's, Spotify and AstraZeneca. That's it from us. Have a great weekend, and we'll see you next Friday.